What's up, everyone? It's Karthik with MoneyVest. So markets here, of course, continue to be down from their Friday's close, a little bit over 2 to 3%. So if you come over to the markets, you'll take a look at the NASDAQ 100. So QQQ is down over 2.3%, S&P 500 down over 2.3% as well. Almost identical. They are both down over 2.3%. And a lot of individual stocks, of course, there's carnage in the markets, but we have recovered quite a bit from the market open. And I personally have deployed close to $15,000 at market open. And of course, in the following hours, we had a live stream this morning. So we had over a 2-hour live stream this morning during market open. And we had almost 1,000 people join during that live stream. And the question that I have for you in this video is, are you buying? What are you doing in this market environment? That's the question that I have for you. And I'm also going to explain a few things related to volatility, related to our data and some statistical analysis on the markets, which I think is going to be very, very useful. And it's going to help you make better decisions, better, higher quality decisions when it comes to just investing or, buying in general. So hope you all enjoy this video. All I'm asking in return is that you drop a like and subscribe to the channel. And also please do me a favor and share this video with a friend or a family member, somebody who can also benefit from this analysis, in other Discord channels, on groups, in WhatsApp channels, whatever it is that you are, following or keeping track of. Please do me a favor and share these videos. It's just word of mouth referrals and recommendations like this that help us grow and getting us to over 80,000 subscribers. So thank you so much. I really appreciate each and every one of you. So let's start with volatility. And VIX, as we already know, had spiked to over 65. Now, there's a lot of beginner investors who have been joining us in our community, in our Discord, and people may not really understand what VIX represents or what the volatility really is. So it is nothing but the volatility being tracked on the S&P 500 based on the options activity in the S&P 500. So if I come over to volatility, what you'll notice is that the VIX essentially spiked to 65, and at one point the volatility was up 140%. It was up 140%. It was at its highest level since the COVID crash, the pandemic, right? So we were practically at the same level as back during March of 2020. That was a spike that we witnessed in the VIX, and we experienced a surge of over 622%. We've experienced a very similar surge this time around. At one point, we were up over 456% for the volatility. Of course, we didn't quite get up to as much as 84, 85, but we were still pretty high at over 65. So what did I do? I had pre-market orders ready for execution at market open. A lot of our members actually had pre-market orders ready to go at market open at 9:30 a.m. Eastern. So if you come over to the 5-minute chart on the VIX, you'll notice that we actually touched highs of 65 at 8:30 a.m. Eastern. And from those levels, from those peak levels, we are now down a whopping 49%. So we've pretty much been cut in half in volatility. And what has the market done during that time? Well, if you come over to QQQs, between 8:30 a.m. Eastern and where we are now, we have seen a pretty nice recovery for the NASDAQ 100. So this right here is 8:40. You can see quite precisely 8:25 a.m. It has rallied over 4% as volatility during that time has been crushed almost 50%. It's now starting to push back higher a little bit, but the idea here is that when the VIX is high, it is time to buy. Okay, that is something that we have discussed over and over again. Now, I want to be very clear. Do I trust this rally? No. Do I feel like we're on our way back to all-time highs? I don't know. But what I can tell you is that when the VIX was high enough, the risk reward was extremely good for us. Because if you come take a look at these spreadsheets, so we've got these spreadsheets already created for everyone, and we're going to make them available on our MoneyVest platform as well. And this should really help you understand things better. This is why we look at data. This is why we perform statistical analysis so that we can actually look at the data and what it's telling us and make better, more confident decisions. So you can see that the volatility currently has a read of 32, which in itself is also a pretty extreme rating, right? We are at the 94th percentile, because if you come over here, these are the different percentiles we have created on volatility. So 32 means that we are somewhere between 33 and 28. So we're somewhere between these two numbers. So somewhere between 90 and 95 percentile. And where are we? At 94.27. So 94.27 percentile is also considered rare, because if you come over to this total observations, we've got data worth over 33 years. So we've got volatility data for 8,514 days, or over 33 years. And if you take a look at the number of days the volatility has spent over 30, it is only 721. Now 722, because VIX is above 30 right now. So number of days spent above 30 in the last 33 years, 722. If you put things in perspective here, we have only been at these levels for 8.5% of the times in the last 33 years. You want to hear something even more crazy? If you go back to where the VIX was at market open or during market open, it peaked at over 65, right? So if you take a look at days spent over 60, because it was at 65, that's where it peaked, 38, including today, 39. 39 days in the last 33 years, the volatility has been above 60. And that is less than 0.5% of the times. So in order for us to capture that is historical in itself. If you bought today when the VIX was above 60, consider yourself capturing a very, very rare event in the market where we've only seen less than 0.5% of the times this happen in the last 33 years. So if you put things in perspective like this, you will better understand how to make decisions and why we need to make decisions. So I'm not saying that the bottom's in and the volatility already peaked. I'm not saying that. I want to be very clear. Nobody knows where the bottom is, where the top is the volatility peaked here or not. But the idea here is that when the VIX is coming up to these rare levels, it is by far an opportunity, screaming opportunity to take advantage. Doesn't matter, what's going on with the rest of the world. When volatility high, it is time to buy, as we have discussed on the channel time and time again. Now, if you consider MoneyVest Index also coming down, it's now in the green zone at 2.85. And the reason for that is, of course, volatility is high. There's a lot of other technical indicators that we've accounted for, including market breadth indicators, including the drawdowns on multiple different indices. So we account for all of that. And we're coming down to 2.85. Now, if you come over to the MoneyVest Index, 2.85 is going to put us here. So right over here, that's where we will be. So inside the first band of this green zone. And that's exactly why I am buying in light. So I deployed about $15,000 worth of cash today. I've got another 100 grand that I'm sitting on that I will be buying more shares and more stocks with. So that's the whole idea, right? It's you dial up on that aggressiveness as markets continue to give you better and better and better opportunities, better and better deals. If markets keep selling off, I keep buying more. If markets keep dropping more, I keep buying more. That's the whole idea. And as markets continue to trade higher to new all-time highs, I focus on increasing my cash exposure because something doesn't seem right. We're pushing up to all-time highs. We're trading at overbought levels. We're trading at expensive valuations. I want to be more careful. I want to be more cautious during those times. Okay? So that's how we make decisions here at MoneyVest, is trying to understand the market structure, technicals, fundamentals, volatility, understanding all of that, making holistic decisions based on that approach. So right now we're 2.8. That number could easily fall down to 2.4 or 2 because we're still within the context of a downtrend, lower highs and lower lows. So we're not out of the woods yet, clearly. Even though we've seen an intraday rally of over 3 to 4% for the markets, we're not out of the woods. So I want to be very clear that we're not out of the woods yet, because if you come over to QQQs, what you'll notice is that it's starting to rotate back lower. And on the 30-minute time frame, what you'll notice is that it's still within the context of a downtrend. It is still very much making lower highs and lower lows. As you can see, that this right here is the lower high and the lower low pattern that I've marked out from my previous videos. And from its all-time highs, it is still down over 13%. So we're still in a correction for the NASDAQ. So again, we're still in a correction for the NASDAQ. S&P 500 also in a similar pattern as you can see, the lower highs and the lower lows. Let me just clean up this chart a little bit. And you'll notice that this right here is the lower low that the S&P is forming once again, right? So you know what, let me just delete all of that so it's better and more clear. Lower high, boom, once, twice, 3 times. Lower lows, 1, 2, 3, and 4. And if I essentially mark this out, you'll notice, boom, down, pushing up, going down, pushing up, massive drawdown. So can there be a little bit of a push higher? Absolutely. Can we actually make a lower high? Absolutely. We can get a bit of a technical rebound. We can get a little bit of a bounce back higher as volatility comes down. But this is in no shape or form a signal for a reversal. Okay? We could go lower. We just don't know yet. We're going to have to wait and see how the market plays out. But the bottom line is, nobody knows where the bottom is. So when the risk reward is better and very, very good and volatility is at a peak here, take advantage. Take advantage. Don't think. Take advantage, because deploy a little bit. You don't have to go crazy. I'm not going crazy. I literally only deploy 10 to 15% of what I want to actually buy. So I bought a little bit. I'm not going crazy here. That's not the idea to go all in. Buying a little bit, take advantage of when the risk reward is better. And if the market gives you even more opportunities, hey, that's great. That's why we've got cash, right? That's why we've got deploying power so that we can take advantage. So hope you all enjoyed this video and a complete update. If you want more analysis and more access to, data and information and analysis and understanding of different market environments, different structure, different trade alerts and members only videos and private videos. If you want a whole shopping list of 37 stocks and ETFs with my buy targets, feel free to join our Patreon. Link's going to be down below. There is a 16% annual discount that we're running right now until the end of this month. So we'd love to have you on board. If you have any questions, please feel free to join. And last thing I want to mention is just be calm, be composed, be patient. Markets are giving us an opportunity, so I'm taking advantage. We're not out of the woods yet, so we're still within the context of a lower high and a lower low. So keep a close eye on the overall market technicals. But the bottom line is that I'm still taking advantage. I'm not just sitting and doing nothing. I'm still taking advantage and deploying just a little bit of cash. I did a poll in our Market Open live stream, as I mentioned earlier, and over 56% of you guys said that you are buying. So that's good. Majority of people are taking this opportunity in the market, using this to their advantage. About 39%, I think, 39% people said that they are not doing anything. They're just holding and they're not doing anything at the moment. And I think about 10 to 11% of people said that they are selling and they are exiting their positions. To those people, I ask a simple question, are you traders? Are you actually trading the markets for the short term? Or if you are an investor for the long term? Because if it's the latter, selling when the markets are down, it's never been the right decision, my friend. So hope you all enjoyed this video. Found it helpful. Make sure that you drop a like and subscribe to the channel. Again, link's going to be down below for our Patreon. Happy investing. I'll see you all in the next video.